Are you tired of staring at crypto charts, wondering when to buy or sell? Or worse, have you ever bought Bitcoin at its peak and regretted it later? You're not alone. Today, I'm sharing a foolproof strategy that makes crypto investing easy, stress-free, and beginner-friendly. It's called dollar cost averaging, or DCA. By the end of this video, you'll understand how DCA works, why it's a game changer, and how you can use it to grow your portfolio without constantly worrying about market crashes. So stay with me. You don't want to miss this. Let's break it down. What exactly is dollar cost averaging? At its core, DCA means investing a fixed amount of money at regular intervals, regardless of the market's ups and downs. For example, instead of dumping $1,000 into Bitcoin all at once, you spread it out over time, say $100 every week for 10 weeks. Why is this a big deal? Because it helps you avoid the biggest mistake most investors make, trying to time the market. Spoiler alert, it almost never works. Here's the beauty of DCA. When prices are low, your fixed investment buys more Bitcoin. When prices are high, it buys less. Over time, your average cost per Bitcoin evens out. No stress, no guesswork. Let's talk about why trying to time the market often fails. Crypto prices are unpredictable. You might think you're buying at the perfect dip, only for the price to dip even further. Or you wait too long and prices shoot up, leaving you stuck. Here's a stat for you. Studies show that even professional investors struggle to time the market correctly. DCA flips the script. Instead of stressing over timing, you focus on consistency. The strategy works in your favor automatically because it takes advantage of market volatility. Ready to try DCA? Here's how you can get started in 3 simple steps. Step 1, set a budget. Decide how much you're comfortable investing regularly. Whether it's $10 a week or $500 a month, pick an amount that fits your financial situation. Step 2, choose your crypto. Bitcoin is a popular choice, but you can apply DCA to Ethereum, Solana, or even an index of coins. Step 3, automate it. Most crypto exchanges, like Coinbase or Binance, let you set up recurring buys. This makes the process hands-free. And here's a bonus tip. Treat your DCA like a subscription service. Just like you wouldn't cancel Netflix because you're busy, don't stop your DCA plan because the market looks scary. Let's look at a real-world example. Imagine you started investing $100 every month into Bitcoin over the past 3 years. During this time, Bitcoin's price soared to new highs, crashed to painful lows, and everything in between. But because you invested consistently, your average cost per Bitcoin would be much lower than the person who bought all at once during a peak. Even better, you'd have avoided the stress of watching prices swing and wondering if you made the right decision. One of the biggest benefits of DCA is what it does for your mindset. When you DCA, you're not gambling or speculating. You're investing with a plan. That means no more panic selling during market crashes or feeling FOMO during sudden price spikes. DCA keeps your emotions in check and helps you focus on the long-term goal, building wealth steadily over time. Let's quickly recap the pros and cons of dollar cost averaging. Pros: it's easy and beginner-friendly. It reduces the risk of bad timing. It builds discipline and consistency. Cons: you might miss out on bigger gains if the market suddenly spikes. It requires patience. It's not a get-rich-quick scheme. But for most people, especially beginners, the pros far outweigh the cons. Now you know why dollar cost averaging is the easiest way to start investing in crypto. It's simple, it's effective, and anyone can do it. If you enjoyed this video, hit that like button and subscribe to Entrepreneur Brain for more crypto tips and strategies. Have questions or want to share your own DCA experience? Drop a comment below. I'd love to hear from you. Thanks for watching, and remember, the best way to succeed is to start today.